All right. Good morning, sir.
Good morning. It's a
And,
bright Saturday morning.
I know. Yeah. So, are you in the office or it's an off
No,
day in the risk management world?
it's it's definitely an off day. We don't work on Saturdays and Sundays generally, but it has been raining outside, so the weather is quite good.
Yeah. Thank you.
In
Thank you
fact,
very much for doing this, Sushant. I really appreciate you taking out the time. Just for the viewers, I'll introduce you in whatever I know. So, Sushant is a FRM charter holder, and he's been. You also a CFA?
no, I've done FRM and PRM.
PRM. Oh, okay. You've done the PRM. We should talk about that. So, Sushant has been working in risk management for more than
Around
10, 12
yeah,
years
14 years
now.
approximately.
Yeah. And how we know Sushant is basically, I think your team got in touch with us, I think 4 or 5 years back, 3, 4 years back. You wanted to recruit some people
Yes.
and we sent you a few, you liked some of them. And then that's how I think we got into this relationship.
Yes, yes, definitely. Yeah, that is one of the things which I've told you also, which I tell everyone. Like the conversion, the kind of conversion rates that we have been having from FinTree, that is amazing. Like one thing which I always believe is this certificate is always, it's for me, it's just a piece of paper. People go for CFA, FRM, PRM. I always feel it's just a piece of paper, nothing more than that. Your education actually reflects in the kind of work that you do, the knowledge that you carry forward, and that is one of the differentiating factors. I think from everyone that I've seen from FinTree. So maybe because of that, we have always had a very good conversion rate from FinTree. Um, Most of them, I think, or maybe for you it would be all of them, but for me, most of them carry a very strong background of financial world, let it be financial asset classes or any of the financial markets. Risk also to a great extent, valuations, everything. So that is one of the differentiating factors of FinTree. So yeah, as you were saying, from last
Thank
four
you for
years.
thank you for saying that. You made my day.
No, that is actually because we prefer CFAs and FRMs, and from wherever we hire, not only from FinTree, from everywhere, we look for this degree. And a lot of times, I see that people do CFA just for the sake of getting certified, like writing that CFA against their name or having that CFA degree or maybe FRM or PRM degree. But I think it should be a little beyond that. People, a lot of students, at least in my experience, I come across this issue a lot of times. Like people do not understand the concepts, which I think because of your coaching and I have seen that in FinTree people. I know a lot of your students, and that is one of the differentiating factors for sure.
Fantastic. Thank you again. Wow. So see, risk management is relatively undiscovered world. Like when people enter into finance, I think you know they've heard of investment banking. It sounds really cool. It sounds sexy. Then equity research, fund management, because they see these guys on television. I don't think a lot of people start out in finance thinking that risk management is going to be a career, per se. So, can you simplify the whole risk management space for us? Because you've worked across spectrum.
Yes.
For someone who's just 20, 21 year old thinking about finance career, what is risk management all about?
So, in a broader perspective, it is one of the inherent sections of any bank, let it be investment bank or a domestic bank or any, even for that matter, non-banking financial corporation. So, people know about, as you said, fund management or research or being a trader. So, people know about these profiles a lot. Risk, as you rightly said, it's to a large extent it's undiscovered. In fact, the world of risk itself is changing. Like the way things were getting calculated around 3 decades ago, they were not same as when I started my career around 15 years back. And if I will just have a look at the last 15 years, the risk management world has again changed, and it is changing more rapidly now with with the intervention of with these data availability and technology. So in a broader perspective, I would say that it is one of the inherent section of any bank, like research or fund management or anything. Like in layman's term, I always tell people that the way we have when you're driving a car, the way we have accelerator, we also have brake, and we act as brakes, brakes of the car. When you're trying to reach a destination, you'll find a lot of speed breakers, red signals, traffic hazards, a lot of these things. We act as brake for cars. Obviously, I mean, just to give you a perspective, like this is what I feel. We all are risk managers in personal life. You just think about if some of your close friend, if any of your close friend would ask you for money, if they would want to borrow some money from you, all the questions that you get from will that person default? Will that person return my money in time? Will
I'll just block the number.
Yeah. If the answers to any of these questions would be yes, then maybe you'll block the number, or maybe you'll politely say, I do not have that amount. But yeah, we in personal life also, we keep on assessing the risk in each and every situation, not only in case of anyone borrowing money from us when we go to a bank, or even when we are just getting out of our house also, in very general, like I play a lot. So if I used to play badminton to a good extent, to good level. So while playing also, I used to, there are risks involved in playing also. There are risks involved in driving car also. Like, I used to do, some drills before actually started actually playing badminton. So, you try to cover those risks. There is a risk of getting injured. There is, when you're driving a car, there is a risk of meeting with an accident. So you'll drive, carefully. Even when you're walking on the street, when you're doing anything, there is risk involved everywhere. So we all have that. It's within us from by birth. We get that thing, but
instinct.
Yeah. But when it comes to profession, it is, as I said, it is to a large extent undiscovered. But yeah, that is definitely the case.
But does it mean, Shashank, then, because when I'm so I'm more into motorcycles and cars. But
Awesome.
when I'm riding, I don't enjoy brakes as much. I mean, I need them, but I don't enjoy them as much. So is risk management inherently a career for people who are a little more conservative, or, risk averse of sorts? That's how we should think of it?
I would say no, because I mean, it is as a profession, it is very different, because see, as a profession, risk is in today's world, it has become very much analytical after after all the technological enhancements and the availability of all these new kind of data. I think it has become more analytical. So a personal preference, like I'll just give you an example. Like just imagine how the world used to function around 50 years ago. There used to be a branch manager. Investment bank as a concept was, to a large extent, it was not similar to it is as on today. So we used to have traditional banks wherein there used to be a branch manager, and if you would want a loan also, then it used to depend on that branch manager a lot.
That's true.
How that branch manager perceives about that particular customer, because analyzing the credit worthiness of the customer also, everything used to happen. It wasn't as analytical. It was a lot of things were driven by perception, by how the customer used to present himself or herself. These days, everything is driven by data. So all these perceptions, or the behavior of a person, like these things have become less important in today's world. If you want to approve a loan also, what you'll do, you'll check CIBIL score, or you'll check credit worthiness or repayment history of that customer, or the institute also, or the company. and then you will check how much money the company is making, or the profile of that, or maybe if it is an individual, you'll check how much salary or income that person is drawing on a monthly basis, and all those things will come into picture. But it has become more analytical these days. So behavior of a person is, in today's world, that is definitely not the case.
So you're saying that means
It is for everyone. Yeah.
Analytical skills is probably one of the core determinant for a successful career in risk, right?
Yes, that is true. That is true. In fact, as far as analysis is concerned, let it be the job of a trader or a fund manager also. Analysis is required everywhere. In risk management, it is the need for that is even more because we have to deal with we as in risk managers have to deal with. I'll give you an example. Just imagine a trader who is dealing into equities, or just taking long short equities, or maybe a commodity trader or a currency trader, whatever. So those traders will have their own asset classes. They'll have expertise in their own asset classes. Equity trader will have a very good broad overview of whatever is happening in the national stock exchange or whatever. And similarly, currency traders will have their view on different currencies, different markets. But we as a risk manager do not have that choice. We have to be good in all the
multi-asset classes.
Yeah, multi-asset classes. And there's another perspective as well, like as far as strategies are concerned, like you'll find a directional trader who will be taking positions on long short positions, will be dealing with long short positions, or maybe you'll see arbitrage traders who'll be who'll get into maybe index kind of trades, or cash futures trade, or maybe high frequency traders, whatever. But risk managers have to deal with all kind of strategies across asset classes. So there is no choice. Like a portfolio, broader portfolios are made up of all these strategies and asset classes. So the requirement of analysis and understand, like whatever you teach in CFA, I think we cover those all. Maybe a trader would focus, let it be some would focus on Greeks if they are dealing with equity derivatives, or maybe currency index derivatives. Bond traders would focus more on the knowledge that they would have gained from you regarding DVO1 calculation, or modified duration, and all those things. We take into account everything. We have to understand. We have to have understanding of each and everything.
That's an interesting perspective, because I didn't think of it before, but now that you said it, it makes a lot more sense. Because if I get into a traditional asset management space, I'm probably doing one asset class and maybe building expertise in one strategy, right, within that asset class. But if I'm into risk management, I dabble a little bit into equities, 10 different strategies. I do currencies, I do bonds. So I get to do variety of different things.
Exactly.
So that leads to some very interesting nerdy calculations with your finance community or colleagues in general.
Yes, that is, yeah. And the best part is things keep on changing. Like I'll give you, so earlier, like even before I started working, even before I got into risk management, the most important calculations in risk were considered to be some kind of exposure limits on different asset classes, or maybe maintaining some regulatory capital, or how to restrict people from trading, or how to avoid trades into restricted securities. So all these kinds of work used to fall under risk management profile. When I started working, concepts like value at risk, and these were there earlier also, but they started taking more prominence. Like
which year was that?
I started in 2008, but I started as I was into corporate strategies. So I shifted to risk management in the second half of 2009.
So VAR was already there, and VAR was relatively popular, and probably unpopular after 2008.
What you said is definitely right. I've read at a lot of places wherein people have said that VAR, after the credit crisis, it lost its importance. I have seen personally is it has become more and more popular. It has become, yeah, there have been shortcomings which people discovered during 2008 crisis. But definitely there are shortcomings, and it is for especially for fixed income instruments or all the issues we had with liquidity crisis also during 2008, just after credit crisis. VAR actually people realized that there are a lot of shortcomings, but VAR for individual asset classes, I think it has become more popular with time. Like if you talk about say asset classes like equities, currencies, commodities, it has definitely become more popular. In mortgage industry, has lost its reputation. I definitely agree with. In fixed income sector also, especially for high yield securities, VAR lost its shine to a large extent. But if we'll talk about portfolio level statistic, then I think VAR is the most common.
Still one of the most popular. Okay.
Yes.
For the help of our audience, those of you who do not know what Chinese German we're talking here, can you quickly simplify what VAR is so that people have some context?
So bookish definitions would vary a little. I'll talk more from practical sense, like what from
Yeah,
what.
sure. Yeah, of course.
So it is generally a number which all portfolio managers forcefully have to take into account. It is. It tells about how much a portfolio can possibly lose in a day or in a given period of time with a certain confidence level. Like when I'm saying that with 95% confidence, if I'm like it is it is very similar to normal life, like when we watch cricket. So even there we say that okay, I think that 95% India will win. So it is more like that.
Little bit like that.
Yeah. So we say with some confidence level that the loss of a given portfolio would be within this limit. What happens beyond that, what happens in the remaining 5% of the scenarios is not under VAR. Yeah. So that is yeah. I mean, bookish definition would vary. Like we talk about.
Yeah. Let's not go there. That's okay. All right. So VAR is basically if things go wrong, how much we'll lose or something on those lines, right? Okay. So let's do it this way, Sushant. So I'm a kid. I'm 21-year-old. I'm watching all these videos and trying to figure out what to do with our life. And I'm kind of lucky because when you and we were discovering our careers, it was a pure blind shot, right? There was no so much of content available out there. So if I think that, okay, let me flirt with risk management a little bit, how would my life be? Okay. So if I go to, I know it varies drastically, but I just want to know how your life is. Like, what time do you reach office? What do you do once you go to office? Typically, how much do people get paid? Do they get Saturday, Sundays off? Is it work pressure wise? Is it very intense? Just give us a little flavor on the life of a risk manager.
So before I explain that, I'll say that risk management industry has actually widened to a very great extent in the last decade, I would say, or rather 2 decades. There is a lot of boundary level divisions which have got added under risk management. Let it be like maintaining regulatory capital, so that is also seen as an extension of risk management profile, or maybe there are again different verticals like operational risk, credit risk, and all those things which were there earlier also. But yeah, maybe into things like in investor reporting also a lot of risk management things come into picture. So risk management as an industry, it has widened and it has acquired a few more peripheral roles as well. A typical risk manager's day would vary based on which segment that or which vertical that risk manager is catering to. But mostly, or if I have to make it very much generic, then I'll say that it starts with as far as work timings are concerned, it is more in line with a normal fund manager or a trader or any of those people. They start their day just before the market would open, like around an hour before, typically an hour or an hour and a half before the market would open. And then fund managers, they once the market shuts, they will start analyzing what they've done throughout the day and all those PNLs and everything. A risk manager would get into risk calculations. So, but timings generally remain same. Even we start a typical risk profile. Like in my company, it is a little different. But a typical risk profile, a risk manager would start their day and have the timings would be inconsistent. Would be consistent with a normal fund manager. Weekends, markets are shut, so they.
So you get, let's say, about 45, 50 hours of work week, ballpark. 10 hours a day.
Yeah. So this number varies. I'll give you. Yeah, I'll tell you. Like just imagine the role of an operational risk manager. So the job of an operational risk manager will start approximately 2 hours before the market would open. Once market would close, after half an hour or after 1 hour, they leave. So this is their working hours. For people who are into credit risk, a lot of times their market hours, their working hours do not align closely with
the markets.
For people who are into markets risk, they are like most of their work would be done during market hours or maybe post market hours. So yeah, so those things vary. Yeah.
But generally, we can say there's a decent work-life balance.
Yeah, it is decent. The work-life balance is definitely good. At least for me, it has been good in the last 14 years.
And that's a rare thing in finance because a lot of other recruiters with whom we work, right? The first thing that they do at the time of interview is scare candidates off. Like, we are going to take your life away. No weekends. In fact, the last night I was having a discussion. This guy is in private equity, real estate, and he's got a dream profile, paid insanely well, working with the best brand in the country. 3 months into the profile, he called me. He was almost in tears, saying, if I quit, will you be okay? And, is it okay if I quit? And we were having that conversation. So generally, a lot of finance profile, I think the pressure is quite a bit. But then from that perspective, I think risk management also, if someone, is really sure that I need that work-life balance, that's definitely one area they could explore.
Yeah, see, I'll give you I'll state a fact over here. So risk management actually it is an all-weather profile. I generally say it like this: it's an evergreen profile. When I was doing engineering, people used to say that mechanical engineering is an evergreen field. Risk management is an all-weather field, but definitely when the volatility is higher in the market, the number of hours would go up. But it's not always the case. There are good days, there are bad days. But what I was trying to tell you is there is an element of luck in most of the financial services profile. You just think about a trader, a normal equity trader. The trader can be like, super brilliant, extraordinary, but when the day is not good, not everything is in the trader's hand. If there would be, in case of COVID, or if there would be sudden rise in interest rates from Fed or even for RBI in our case, so there are a lot of things. Yeah, happen, and things like those things happen, and everything is not under their control. There's a lot of luck also involved in let it be, or if you'll talk about a high frequency trader, they have to be dependent on the algorithms. I was like in 2012, there was a case during, we have that Muhurat trading during Diwali. On Diwali, like Puja day. So one of the algorithms, it was a Delhi-based broker, and one of their algorithms went bust. So they were like, they were selling at low price and they were buying at high price. Like they were doing normal cash future arbitrage trade of so BSC, this Sensex had come up with futures and options during that phase, and they had their high frequency arbitrage strategies based on this. And one of their algos went bust, and in roughly 12 minutes they lost entire, they actually went bankrupt. They had to file for bankruptcy after that. So it's actually a case study also. So things like this happen.
Interesting.
The traders can be brilliant. A high frequency trader, they will have to be dependent on algorithm. There's another case also which I actually saw in one of my previous companies. Like, the computer hung up, and they were not able to make any changes. Even in high frequency trade, they insert parameters based on the current market conditions, like things like IVs and everything. So the computer hung, and they were not able to make any changes. But the trades were happening. So we had basically unplug the cable of that computer, and we had to shut down the computer like that. So things like this happen. There's dependency on technology and a lot of other things. So there is there is an element of luck which is required in most of the financial services careers also. But in risk management, that is to a very great extent, that is not the case. If you're good at analytical skills, if you have your analytical skills in place, if you have good knowledge about valuation of each of the asset classes, if you understand different sensitivities, Greeks, DV1 duration, VAR, expected short. There are so many things which we learn in CFA, in FRM, PRM, everywhere. So if everything is in place, element of luck, it's not as significant as the other. And probably this was one of the reasons why I chose risk as a career also from corporate.
You were playing risk management with your own career as well, right? Right from the beginning.
Yeah, I'm trying to hedge.
Interesting. How does it pay, like compared to the other profiles in terms of pay for like someone who's a fresher, maybe let's say FRM or CFA 1 or 2 levels? Is it at par with the rest of the industry?
To the best of my knowledge, I think it is par. At least most of the start level profile, fresher profiles, across roles. I think it is everyone starts with more or less the same salary. Otherwise, just imagine, like, if risk management would offer 2x of what is offered to a trading profile or a research profile, everyone would go for.
We won't have a lot of traders then. No risk to manage.
So I think most of the start level profile, they offer more or less same compensation, at least to starters. What happens after that is a different ball game altogether. It depends, like if you're a trader, how good trader you are, that would determine your career progress. Same is with the risk management also. And with risk management, there's one more thing which was important to me when I started my career. I started my career in 2008. As I said, I was into corporate strategies, but we were going through that credit crisis during that time, and a lot of people in my batch, including me, we suffered a lot. Academically, I had very good marks, but still, there were a lot of issues with literally, I think I would say all the roles. I saw a lot of traders getting fired in my company, also in my my friends' company. Seen those things a lot. So risk management is one of those profile which is a hit during crisis period. Like, when there is a crisis, when the volatility is high, people look for risk managers. So that way, as I was saying, it is an all-weather profile. During crisis, there is risk managers are in demand. When things are good, it is good for everyone. But during crisis, risk managers are in demand. So the thing which concerned me and my friends a lot when we were just getting out of college, the credit crisis and job loss and all those things, people getting fired everywhere. I think I thought of getting into risk management just to be, just to have that certainty around the profile and everything.
I finished my studies around 2008 November, the
Okay.
CA final exams, and then I was out for. So then I gave myself a couple of months just to chill and take it easy. So I was out in the market in January 2009, and it was so. And I think it was because India wasn't affected so much, but it was mostly that sentiment, right? And then obviously the foreign money drying up. So my dream job that time was private equity, and I'd done some jugaad. So I was kind of promised, ki aaja de dunga types, some sort of a promise, but never happened. And the guy was like, "Paisa hi nahi hai," and how will we pay you and stuff like that. It was a tough time to start
Yeah, it was
for
definitely.
all of us.
Yeah, I've seen a lot of bad days. I used to hear, like, whenever I used to receive any SMS. Those were the days of SMS. WhatsApp was not.
Yeah.
So my first thought. I mean, the first thought that used to come to my mind is his job safe? That was
Hmm.
I've seen, like, there was one instance wherein uh, stock market closes by 3:30 p.m. and immediately after, like, one of our major clients went bust in US, and we had to fire around 32 people suddenly, like, all 32 traders. So I've seen those days. I had a few friends in that team also. So those were really tough days. Like, I was very young. Maybe I think I was around 22 years, probably 20, no, 23 years. So it was very, very tough. I mean, I was not prepared to see those faces. Like, I mean, I can go on and on explaining that, but I think I'm getting.
Yep. Yeah. We got the points. Risk
But
management.
yeah.
Risk management will ensure that you have low volatility jobs. So you start
Yeah.
risk management with your own career. It's the bottom of the story.
Yeah, the
Okay.
volatility in market can be high,
Uh,
but it would be low.
and as a fresher, can I expect to be paid, let's say, ballpark 5 to 8 lakh type of range? Is that a fair range for someone who's entering the
For
space?
freshers, like the way we have in our company, it is the final on hand number is 7 lakhs fixed for freshers.
So someone starts, let's say, at 7 plus, something extra, right? And that's how your career starts. And that's not a bad number for someone who's starting out, because in the early days of your career, you want to focus more on profile rather than what you're being
Yeah,
paid.
that's a very
Because what I've
important point.
heard from FinTree people, the feedback from of your side from the students is, I think most of them have really loved the profile. In fact, I was having conversation with Siddharaj. I
Yeah.
recently did a video with him as well.
Oh,
So your video is coming right after Siddharaj's video.
awesome.
Um, so he was telling me the kind of work he got to do with stuff that he learned in his CFA level 2 class. He was working on stocks and he was working on other financial products, and he was saying it was intensely satisfying because that's something we learned in the class. We had the basic structure in our mind, and then we had to improvise in the office and find solutions. So from a
Yes.
learning perspective, I think it offers great opportunities.
Yeah, as I said, there are no boundaries. It's a boundaryless profile. I use a sentence for most of the new joinees. Like, we cover the entire length and breadth of FRM. There is, nothing gets left out. You talk about, we learn about, say, historical stress scenarios, what
Mm,
happened during Asian crisis, what happened during that LTCM thing, all those things.
mm,
So we learn those things in FRM and a lot of these courses also in PRM and similar courses. We use them in day-to-day life. We talk about different sensitivities, the calculation, valuation of each asset classes. We use them. We talk about different strategies, not those straddle, strangle. Those are too basic, but general normal market strategies in practical world. So we use them.
Let's talk a little bit about you, Sushant. Now, let's start with where you're from, what school, and then what college?
I'm born and bred everything in Mumbai. I've done my schooling here only from Mumbai, from a school called Guru Nanak High School. I feel very fortunate to be living very close to my school. We were actually enjoying. Maybe like my voice is not good today. We were enjoying the first rains last night. We went with all my school friends. So, and 5 out of 7 people fell ill. Like even I am not feeling well. I was just sneezing since morning. But yeah, so I'm like a proper Mumbaikar. I did my schooling here. Then I did my junior college from Rizvi College in Bandra. So then I did my engineering, then MBA. For MBA, I went to Pune. I did it from International School of Business and Media. Then
you told me, now I remember. Yes, ISBN, correct.
Yeah, ISBN, right. Then that was back in 2008. Then I
sorry, I'm going to interrupt you now. So what kind of a student were you? Were you always like the smartest kid in the room?
No, never. I was more shy. I'm still shy. I'm a very, by nature, I'm very much conservative. Sometimes I take time to open up. So since childhood, I've been like a very shy person. So, I was not very studious also, but yeah, in terms of marks, I used to manage good marks. I used to hold good ranks in my school days also. Like, sometimes only I used to get first rank in my division. Most of the times I used to hover around second rank, third rank, fourth rank, not below that, but I used to be one of the top rank holders.
You were a smart kid.
I would say smart, like, smart means like, I don't think I'm
study wise. Okay.
Yeah, study wise
you were good.
Yeah.
Okay. And mathematics was your strong suite.
Yes, mathematics was definitely my strong area. There I was, you can say, like, I used to, because once it happened, like we had a quiz at school level. And I was in 7th standard at that time, and the quiz was open for everyone from 7th standard to 10th standard. And like we used to have that annual quiz every year in my school. And I was the first person to win that from a 7th grade batch. Like, that had never happened before, because the questions were somewhere taken.
Was it a quiz on risk management?
It was a maths quiz. So yeah, I used to like maths a lot. I still love it. Maths, statistic.
I've heard PRM has fairly intense maths part compared to FRM.
Yes. Yes. The syllabus is it has a lot of additional things from what we have in FRM.
Anyway, so I think let's not get digress. Let's talk about you first. Then we'll go to CFA and FRM. So you were always good. And is that Sushant, is that a prerequisite for someone to have a good career in risk management? Like, do you need to be generally good at maths and quant?
So see, that definitely helps. I always think, in risk management, to excel in risk management, statistics and having financial instruments knowledge and instruments markets, everything, and having, some orientation towards technology, these 3 things help. But if you see in a lot of financial roles, these things are prerequisite. Not only in risk management, you talk about a trader also, or a portfolio manager. The expectation is the person should be good in statistics, because quants, you need to know normal distribution, you need to know what kurtosis is, what SQ is. So in most of, maybe not much in research kind of profiles, but in trading, in portfolio managing, in a lot of profiles like risk management, a person needs to have a good grip on mathematics.
In school, let's say I was really bad at maths. Maybe I didn't have good teachers, or maybe I just didn't like it. And now I'm a graduate contemplating if I should explore a career in risk. What's your advice for people like those?
Most of the concept, like not only with statistics, with other things also. most of the things can be learned. Like, if I was not good at science, I'll give you my example. Like, history was the worst subject for me during my school days. I used to pass in that subject because of geography. We used to have history
combined.
Yeah, so I used to pass in that subject. Passing that subject was such a difficult task. But history, in today's date, you ask me about anything like when Shivaji was born, like what Mughal, what, everything in civics, also politics. Like, I was yesterday, we were out in rain, but we were following the Rajya Sabha election results. So that is how I'm like, history. I never liked history, but today history, civics, everything is like, I like it more than statistics. I'll say that. So similarly, with if any person was not very good at mathematics in his or her childhood, that doesn't mean like the person cannot learn that in future. Like, even on the job training, people learn a lot of things during on the job training after they finish their engineering, BSc, BCom, MBA, everything. They learn a lot of things. So those things are not a showstopper, I'll say. Not having that intention to learn definitely is a showstopper. But if anyone would want to learn, because see, like, we use a lot of these things in daily life also. The normal distribution, which a lot of people, I think it's a mind block. We actually unknowingly use that in a lot of situations. We talk about possibilities, probabilities, ratios, proportions. We deal with banyas. It's everything. Calculation actually goes in the back of everyone's mind every time. Just that when it comes to curriculum, we think that okay, normal distribution. I don't like kurtosis.
जजी भी दिख रहा है. Tails तो सिर्फ कुत्ते को होते हैं.
Yeah. So yeah, it's the case.
Yeah. So that's a great advice, by the way, because I think that's my stand as well. Because a lot of students who come who say I wasn't good at maths, I just tell them, probably because of your environment and the context in which you studied, and a lot of time it's just this, fear psychosis, because we've done maths all our lives, and I've seen people who probably like came with a lot of fear, ended up loving the subject after spending a few months. So yeah, on the same page.
Yeah,
so now getting back to your life journey again. So then you finished your MBA around 2009. That's when you got into your first job. Eight. Okay. So which was the first job?
My first job was Edelweiss Capital. And there I got into, like, they had Edelweiss at that time was expanding. They had hired 118 fresh college MBA grads from a lot of institutes in Mumbai, Pune, from like some of the best institutes in India, overall India. After 4.5 years in Edelweiss, I shifted to Credit Suisse. My main intention was to gain some, I just wanted to see how, I just wanted to come more closer to global markets, wanted to see what kind of products get traded over there, how they are dealing with them, the risks around that, everything. And then I shifted to Line Data Gravitas. Here we are dealing with hedge funds, like we are managing.
So you've been here for how long now?
Line Data? 8.5 years. 8.5 years.
I don't meet people who work at same place for 8 years these days. You're rare species.
Yeah, I mean, it talks a lot about the company as well, the kind of growth we have had in the last few years.
How? And you've studied CFA as well, though you haven't written the exams.
Yeah.
So, based on your assessment, and this is a $1 billion question. Okay, billion is an exaggeration. This is a valuable question. We get to hear this all the time. People come and say CFA versus FRM. Kya karu? What should I study for CFA? Should I study for FRM? What's your view of these courses? Like, does it make a difference if I choose one over another? What do you think?
Oh, okay. So, see, practically, if I say, for me, I've not. I know curriculum of CFA. I don't have certification, but still, I would say CFA would hold. CFA is a much better course than FRM personally, FRM has its own because FRM, I think it is much quicker.
Yeah.
But there are a few things in FRM which is good for any analytics role, let it be risk management or any analytics role, that I found missing in CFA. But if I have to choose one, I will definitely choose CFA because it covers a lot of things. It covers, I expect, a normal graduate should know about. I think CFA covers them all. In fact, though we are into risk analytics, a lot of times I ask for profiles with either CFA or FRM or any level of CFA and any level of FRM. Being from a risk management team, I do not differentiate between CFA and FRM a lot. But if you talk about portfolio management roles or trading role or research role, they would prefer only CFA. They may not ask for FRM. So CFA, I think, holds, it is, if I have to choose one, I'll choose CFA in that sense. But
okay, I wasn't expecting you to say that. But that's if I were to summarize this, if someone is not sure what part of finance they want to work in, right, early discovery stage, then clearly for them CFA is the right way to go, because CFA, even after CFA, one can work in risk management.
Yes.
So it's not that risk management is blocked. But if someone has a very clear focus that I have to only work in risk management, maybe those are the people who can probably benefit from FRM as against CFA.
Yes.
And then again, other constraints, like fees and duration and all those variables also play a part in it.
Yeah.
Okay.
One good thing is you see a lot of topics are common between FRM.
Yes.
So it's not like if you're taking CFA, then you can also, if fees is not a constraint, then you can also opt for FRM, because most of those things, you talk about costs and you talk about valuations, all these things get covered in both the courses.
Yeah, I've been guilty of that crime myself. But I generally don't recommend people doing that, because I feel there's no point chasing certifications. You have one, it's good enough. Why do you need 10 just because you have a lot of certification doesn't mean, Sushant is going to value you more, right? He'll probably value more if you can demonstrate that you've truly learned what you've learned rather than passing the exams.
Yes, exactly. It actually takes me to one of my first statements today. Certification, I always think it's just a piece of paper, nothing more than that. The MBA certification or CFA, FRM, anything. The education actually shows up in work, how much you know.
And I think both of us also agree on the fact that you don't have to really chase 10,000 different certifications. Right? You pick one, you're good at it. I think that's pretty much good for the rest of your life. Unless and until you're in the hobby of
I've seen there was a forward in which one person had, I think, some 13, 14 certifications, like XYZ, CFA, FRM, PRM, like CAI, like I don't even remember. There were like some 15 odd certifications. So it's useless. Useless.
Yeah.
Really useless.
Okay, I think this is pretty much we've covered. Okay, I think let's talk a little bit about PRM, because I've heard about it. Once in a while, people call us asking if we are teaching PRM. We say no, we don't know how that goes. What do you think of PRM? Like, is it, two questions? One, is it really that tough? And second, does it have any jobs in the market?
So I think first, PRM is not as popular as FRM. FRM is much popular. But I found the course content of PRM much better than FRM, and it is much more. At least for me, I think PRM is much more difficult than FRM, because FRM is very much structured, and not everything would come from their book. Like in FRM, at least
that's bad. That's really bad. Okay.
So having PRM is more for people who have some bit of experience in risk management. So that would help. Otherwise, just by reading book, it may be a little difficult. FRM is not like that. Even a fresher, if the person is spending good amount of time understanding concepts, and if that person has a guru like you, maybe he or she pass FRM. For PRM, it would be a little difficult because practical knowledge is more tested in PRM.
FRM becoming popular is still a recent thing. I think even today, majority of the FRM candidates are actually CFA candidates, right? That's my guess would be 60-70% overlap. So,
that is true.
So in the market, there's the massive mismatch, which I think is a good opportunity for someone who's starting out career now. Learn, good finance and maybe learn basic coding, the usual Python, SQL, good with data, and then you have a nice career ahead of yourself.
Correct. And this growth rate is here to stay, at least for the next 5 years. Is not going anywhere.
I think it will keep on, because you can't make your risk management dumb. I mean, you can make everything else. Risk management has to have some human element,
right.
Because otherwise that itself is a risk.
Yes, yes, clearly.
And look at interesting stuff, right? We have some FRM students in New York and other places. Their starting salary and India's starting salary, the delta is of 10x. So you take the US starting salary, you divide by 10. That's what you're getting, here in Mumbai. So look at the type of arbitrage, these banks have, and you get equally good talent, maybe even better. I don't know, but you get good talent and you get it at really, really low cost. They have all the incentives to keep on, shifting these, outsourcing these profiles here.
Yes, true. That is a very valid point. To give you a perspective, we most of our clients are from US. And if we have to hire a risk manager, a dedicated risk manager in their place, so we also interview people over there. And it is very difficult to find good risk managers over there. FRM is it is a popular degree, but you won't find as many people in US like you find.
We have a few, by the way, if you ever need some people there.
Yeah, we actually we are expanding as a company, as a team. We are also hiring, and that's what I was telling you the other day. Also shared.
Yeah. So did you also notice the same difference in the pay in the US versus India?
Yes. See, when you don't find people, you definitely have to bridge the gap by paying more to the few people that would turn up for interviews and all. So that definitely is the case. In fact, that is one problem which we saw in Hong Kong also. A couple of years back, we were trying to establish a team in Hong Kong, and we came across a very similar situation. So we had to increase our payouts in those regions. In India, it is still better. It is far better, I'll say, with respect to these places, because India is a knowledge-intensive country. People are brand conscious. But it is a knowledge-intensive country as well. So you'll find talent. You'll find people with good knowledge, and disciplined, sincere people. You'll definitely find a lot of them. Relatively, I'm saying. As on today, even I'm struggling to hire. But I'm talking from.
You're in that temporary,
this is a temporary phase
right now. Yeah, hopefully.
Temporary phase. Yeah. but in US markets and in Hong Kong markets, especially, this is I'm talking from my past experience. We have struggled to find good talent. FRM, though it is popular, you won't find a lot of people with FRM degrees. Thank you for that.
I really loved some of the insights, because I truly genuinely learned, some of the things that you said. Like, for example, I had never thought that in risk management, you get to work in so many diverse areas, and some of the examples you gave in terms of what you were required to do. So thank you very, very, very much. We really appreciate
Glad to be here.
Your time today. And I hope we'll be able to send you high quality CVs going forward as well. And you'd find FinTree candidates good.
Yeah, I'm looking forward to that. You make my job much easier. Like, as I told you about the conversion ratio. So you make my job very much easy with these
It's
things.
both ways. It's both ways because our kids also love the
Yeah.
kind of job that you offer. So it's a
Yes,
nice love
yes.
affair. Let's keep on doing it.
Yeah,
Let's keep
it's a
on
win-win
stepping
situation.
into that way. Yes.
Okay,
All right.
sir.
Thank you very
Thank you.
much. You have
Yeah.
enjoy the rest of your weekend.
Yeah. You too.